The future of money can be simple and fair. Imagine a world where everyone can access financial services easily, right from their phone, you know? This is the promise of new digital currencies. One of these is called Pi. The Pi network is a community of millions. This money is called Pi coin. Unlike other digital currencies that are hard to get, Pi coin can be earned just by using a simple app on your phone. This makes it available to many people around the world, not just a few experts. Banks are starting to notice this large and growing community. Banks are always looking for new ways to serve their customers and grow their business. They see the millions of people using the Pi network and recognize a major opportunity. It represents a chance to be at the forefront of financial innovation, blending the trust and security of traditional banking with the reach and simplicity of a mobile-first digital currency. This is why the conversation between banks and Pi is starting now. The core idea behind Pi is financial inclusion. This means giving everyone a chance to be part of the financial system. Many people today do not have a bank account or find banking services too expensive and difficult to use. The Pi network was designed to solve this problem from the very beginning. It allows people to participate in a digital economy with just a smartphone, an item many people already own. This creates a foundation for a more equitable financial world. As we stand here on October 23, 2025, the world is more connected than ever before. Partnerships between Pi network and global banks are a logical next step. Let's look at two important examples: China, Nigeria. In China, the financial system is incredibly advanced and digital. People use apps like Alipay and WeChat Pay for everything. A large bank in China might want to partner with Pi to tap into a global community. Connecting to a worldwide network like Pi offers new possibilities for international trade and remittances. The bank's goal? Securely connect trusted services to Pi's vast user base, creating a compliant bridge for digital assets to flow in and out of the country. In Nigeria, the situation is different, but the opportunity is just as large. Nigeria has a young, tech-savvy population. Many people are already using cryptocurrencies. However, the formal banking system has not reached everyone. A Nigerian bank would see a partnership with Pi as a powerful tool for financial inclusion. By connecting with Pi, the bank could offer services to millions of new users who may not have a traditional bank account. For a bank in China, compliance and scale are the most important factors. Strict rules mean the bank acts as a trusted gatekeeper, ensuring every transaction is legal and transparent. The sheer size of the Pi network is a major attraction. This enables new cross-border products with top-tier compliance and security. A Nigerian bank, on the other hand, would focus on user access and growth, bring more people into the financial system for the first time, offer simple bank accounts, savings plans, and small loans directly through a platform people already use and trust. This positions the bank as an innovative leader, dedicated to serving all Nigerians and driving growth from the ground up. The world is more connected than ever before. People expect services to be instant, global, and easy to use. Traditional banking is powerful and trusted, but sometimes slow and costly. PiCoin offers a potential solution, built for the digital age. So how would PiCoin and a bank actually work together? The connection is built using a few key technical steps, like building a bridge. First, we need on-ramps and off-ramps. An on-ramp is how you change regular money, like dollars, into PiCoin, or Naira into Pi. An off-ramp is how you change PiCoin back into regular money. Banks can manage these ramps. A user connects their bank account to their Pi wallet through a secure app. This allows them to buy PiCoin. This allows them to sell PiCoin, making it useful for everyday life. The bank ensures these exchanges are safe and recorded properly. Next is the issue of custody. Some users hold their own PiCoin, but many want the extra security a bank can offer. Banks can provide custody, super secure digital vaults for PiCoin. They protect users' PiCoins from theft or loss. The user still owns and controls their Pi. The bank handles technical security. Peace of mind like a savings account. Banks in the Pi network need to talk to each other via API. API stands for Application Programming Interface, a secure messenger between systems. Check balances, confirm transactions, manage user accounts automatically. A seamless experience. Manage Pi and bank in one place. Finally, stablecoins make things even easier. A stablecoin is always worth a fixed amount, like $1. Banks could create their own stablecoins. Users can swap Pi instantly, useful for payments and clearing between banks. Imagine sending money Nigeria, China in seconds, value preserved. When banks in the Pi network work together, there are big benefits for everyone. Security, convenience, inclusion, lower fees. Enhanced security. Banks are experts at protecting money. Fraud detection systems, insurance on deposits, secure custody. Pi gets bank-grade standards. Banks launch innovative products safely. Manage all money, traditional and digital, in one app. Check Pi, pay a friend. Transfer to savings, one screen. Merchant accepts Pi. It appears as local currency instantly. Business operations become smoother. Traditional cross-border fees are high. Pi aims for extremely low cost. Lower fees bring more people into the system. Banks access millions of digitally savvy potential customers. Offer Pi earning savings. Create new revenue streams. Challenge 1. Regulation. Complex and changing. Mitigation. Collaborate early. Prove security and transparency. Challenge 2. Liquidity. Buy-sell without moving price. Mitigation. Banks act as market makers. Multiple bank exchange partnerships. Challenge 3. User trust. Mitigation. Best-in-class security. Simple, clear education. Challenge 4. Integrating bank cores and decentralized networks. Mitigation. Start small. Pilot. Scale carefully. Test continuously. Ensure robustness and reliability. Ready for millions of users. Beat, breadth, ramps, custody, APIs, and stablecoins. The bridge is practical. Now let's see it in people's lives. Transition. From Shanghai to Lagos. One of the most powerful use cases is remittances. Send in seconds, minimal fees mean more arrives. Pay safely with your Pi wallet at local markets. Merchants get instant settlement and clean records. Small shops to large retailers can accept Pi with bank APIs. Keep Pi or auto-convert to local currency. Pi-linked savings accounts can build better habits. Transaction history helps build credit for microloans. Wei, a designer in Shanghai, gets paid in Pi by a client in France. He off-ramps to yuan in minutes for rent. Ultra-low fees. He buys a handmade wallet from Italy with remaining Pi. For Wei, bank and global wallet feel like one. Funk in Lagos starts accepting Pi, safer than cash. Instant confirmations, neat records in her banking app. Her transparent sales history unlocks a small loan. She grows her business with confidence. Roadmap, start with pilots. Specific use cases like remittances or merchant payments. Learn, fix, and iterate before expanding. Run regulatory talks in parallel. Be transparent. Show consumer protection. Approvals build long-term trust. Refine APIs. Strengthen security. Optimize speed. Scale infrastructure. Make the experience simple. Hide complexity. Educate continuously. How to link banks. Send, receive Pi. Avoid scams. Empower users with knowledge. The future of money is collaborative. Banks and Pi together. Bankers, regulators, technologists, community, join the pilots. Let's build it together, starting now. The next chapter of money is waiting to be written. Outro breath.